Hi, this is Andrew Zizas, President and CEO of Real Estate Strategies Corporation, coming to you today as part of our Financial Executive Interview Series. We're here today with Ken Drossman, President of Lakeview Business Consulting and President of the New Jersey chapter of Financial Executives International. Ken, thanks for being here today.
It's my pleasure, Andy. Good to see you.
Appreciate you taking the time. Ken, there's a lot of great stuff going on in the world today. There are a lot of interesting opinions and ideas about the economy and about the world of finance, and wanted to get your opinion as to where things are going.
Okay.
I thought I'd start off with a series of questions, and we'll see where your ideas take us. Given what's going on in the world today, where are companies with respect to hiring? Have they actively begun to hire again? Are they filling new positions? Are there open positions still sitting open?
Well, let me start. It's a great question. Let me start by just saying that the atmosphere and perspective of business owners today is not yet at cautious optimism. It's what I would call cautious skepticism. That's an improvement over last year's bleak pessimism. But people are still uncertain about where the economy is heading and reluctant to make significant expenditures that might increase their fixed costs. So I'm seeing increases in temporary hires. With respect to permanent hires, I'm seeing people only fill those positions that they absolutely have to.
Okay. What areas of business do you think in the coming 2010, 2011 will receive the greatest amount of incremental investment in across various industry segments?
Sure. Well, again, I think you have to start from the backdrop that most business owners have figured out that having a significant cash reserve is the best defense against the uncertainty of the economy. So that's going to moderate incremental investment. Add to that the fact that banks are making it very difficult, particularly for small and medium enterprises, to borrow in order to finance expansion, and that's going to further diminish the amount of incremental investment. That said, what I'm seeing is that companies are not going to hire back as many employees as they have. They're going to look for ways to do more with less. Accordingly, they're going to look for technology that increases productivity. An example, the greater use, what I'm seeing is the greater use of tools like WebEx or Live Meeting or other virtual meeting sites that allow people to reduce, not eliminate certainly, but reduce the amount of their travel costs. Another tool in that same area is companies that are starting to set up and people that are starting to use, companies that are starting to use virtual trade show sites, places where 24/7 you can be an exhibitor at a trade show online, or you can be a potential customer visiting that trade show year-round. Again, an opportunity to reduce the amount of travel necessary to be able to see new developments in the business or hawk your wares, and at the same time get the benefit of having that out there all the time.
Curious to get your opinion as to the cultural impact. The need for people to congregate and break bread and interact on a personal level. If you see technology playing a greater role and diminishing the amount of time people will spend together, do you see that people might be challenged in adopting those technologies?
Well, it takes some getting used to, I think there's no question. My experience with it has been that there's got to be a certain amount of face-to-face. Building trust by breaking bread, by developing personal relationships, getting to take the measure of the person is always going to remain important. But I think that people are going to find that there are ways to accomplish some of the other aspects, the fact-gathering aspects, in the use of these tools.
And you're seeing technology as a real opportunity for investment here, but you mentioned that the investment in technology will take the place of some things that are occurring now. Do you think that'll continue? Do you think there'll be an extended period of time before the economy comes back to normalcy?
Well,
What do you think? That's a short term. Is that a short-term fix?
I think that advances in technology that support doing business more effectively or more efficiently are here to stay. And I think the more people use it, the more they're going to continue to use it. I don't know what it means to return to normal anymore. So in terms of the economy, because I think the landscape has changed and will remain changed for a long time to come. The deleveraging of America is something that I think has decades to run before it really returns to perhaps what was traditionally the experience.
So you really believe in the concept of a new normal?
I think so.
Okay. Let's talk about banking. We all know that there's been tremendous changes both in credit and capital markets. Share with us your thoughts about how the economic situation has adversely impacted the ability of companies to secure financing so that they can fund growth initiatives.
I think you've pretty much capsulized the issue. There was an article in the Wall Street Journal last week that talked about the fact that the credit markets have returned for large businesses, big business. There was a sidebar article that made it very clear that exactly the opposite is true for small and medium-sized businesses. And it's very difficult. Let's face it, the banks caused some of the problems, many of the problems that we've gone through over the last 18 to 24 months because they loosened their underwriting standards excessively. When the financial crisis hit, they ran back, they sprinted back to their playbooks. And for small and medium-sized enterprises in particular, unless you can put the check mark in the yes box on every line of the underwriting criteria in their playbook, it's very difficult to get a yes to a loan. That means that it's very difficult to make investments that would support expansion. It's a vicious cycle. No financing, no expansion. No expansion, no hiring. No hiring, no increased demand. No increased demand, no growth, which means you got to get financing to start all over again, and it's not happening. Interestingly, I had a client recently that we helped obtain expansion financing for a great project after being frustrated at the doors of many of the regional banks, and it was with a credit union. Credit unions have started to step into the void left by commercial banks. Not a lot, and they certainly don't have the lending capacity to fill the void or a significant portion of the void, but they are a road that some businesses may find good to take.
Was that a New Jersey project and a New Jersey credit union?
Both, yes to both.
Wow. All right, Ken, we've got about a minute left, and I wanted to ask you a question about salaries. Do you see salaries increasing in 2010?
So far, what I've seen is that they're largely holding steady, and that's after reductions that many businesses made in 2009. To the extent that there are salary adjustments being made, two things apply. First, businesses are trying to limit those salary increases only to the best employees, the ones that they will lose if they don't adjust salaries. And secondly, more of the increases are performance-based. They are tied to performance against objectives for the individual as well as for the department or the division or the overall company. That makes the compensation increase more variable and therefore more controllable in the face of changes in volume.
One last question, and we're out of time, so if I could ask you for one quick answer. Generally, do you see the business climate improving?
I think it is improving, but slowly. I think that we're going to see some halting steps based on some of the things that we've already discussed. I would say the prognosis or the forecast is partly sunny rather than partly cloudy, but it's going to take a while for it to get better.
Partly sunny, partly cloudy. Well, Ken, thank you. Those are great concepts, great ideas. I appreciate your insight.
My pleasure.
Thanks for being with us today. This is Andrew Zizas at Real Estate Strategies Corporation, bringing to you our Financial Executive Interview Series. Thanks for watching.